Today, we're going to cover a few topics. We're in the introduction phase now. Then we're going to provide you a rather detailed review of the program. And in the wrap up, I will try to address your questions. The caveat, if you have company-specific situation questions, it would be better to talk offline because of the large audience. And I will be available to speak to you by MS Teams if you have specific questions about your company. So the broad overview of the NOL program, which is geared towards tech and biotech companies that have net operating losses, it enables them to sell the tax offset for cash today, well, at the time of the sale, and that cash is used to sustain and scale your operations. EDA's role is to determine your eligibility, and we also can guide your understanding of the application process. The actual benefit is calculated by the Division of Taxation based on your actual tax filings. The companies that are applying to the program have a lifetime cap of 20 million, and that's 20 million for the benefit, not the sales price. And the yearly cap for the program is 75 million. If we have more applications coming in this year, which, knock on wood, we will reach that 75 million goal. The timeline of the program is really more than a year long. We spend the year up until the application launch, which opened last week on May 1. We accept those applications through June 30th. And June 30th is a hard deadline. They will actually turn the computer off at 11:59 p.m. So you have to have your application fully submitted by that time. We can't accept new information after June 30th. We can only accept what we call clarifying information. There's an extensive review and due diligence process before we go forward with recommendations for approval or declination. If a company is expected to be going through a declination, we advise them of that, give them the opportunity to withdraw. Declinations are a matter of public record. There is an opportunity to appeal a declination. So there is an appeals process. Then there is what's called closing and disbursement, where the certificates are transferred to the applicant and the applicant sells the certificates to an independent, profitable New Jersey-based company that's filing taxes in New Jersey. That is a hard deadline again. April 15th is all applications must be sold by that, or all tax certificates must be sold by that point. Nothing in the world is free, unfortunately. There is a $1,000 application fee. It's a non-refundable fee. For awards greater than 100,000, there is going to be a benefit award fee because that's going to require a lot more of management time for review of the application. The total fee is capped at $20,000. So the initial $1,000 fee is included in that. There is an application set aside for businesses that are located in opportunity zones. That is determined by actual GIS coordinates, and there's a link on our website that you can plug in your physical address to determine if you are in an opportunity zone. In general, that's Newark, Camden, and Greater New Brunswick. The set-aside also includes companies that are certified with the state of New Jersey, not with an association, not with a regional certification, not with a national. It has to be certified with the state of New Jersey as a woman-owned business or a minority-owned business. Eligibility. There are actual definitions for biotech and tech. If you are not a biotech and tech, this program is not eligible. You are not eligible for this program. So you are be involved in the provision of a scientific process, product, or service. You have or control exclusively a patent or a license to a patent, or you have a protected copyright with the Library of Congress, which is not common. You have negative operating income for the past 2 years. You employ no more than 224 U.S. employees, at least one full-time employee physically working in New Jersey, and you offer health insurance plans to all full-time employees. So you must have your headquarters or base of operations in New Jersey. You have Again, the protected proprietary intellectual property, which is a patent, or a patent pending, or a copyright with the Library of Congress, which is typically for software. And that you're using that, you're commercializing that technology. It's core to your business operations. The actual definitions are here. This presentation will be available for review, and you can go through the definitions. So what is and what is not protected proprietary intellectual property? Again, it's a patent that's assigned to the applicant. So if it's the inventor's name and it's not assigned to the applicant, it won't work. If it's in a parent company's name and it's not assigned to the applicant, it won't work. It has to be assigned. The exclusive license agreement typically is through universities, but again, it means exclusive worldwide, not exclusive for New Jersey. It's exclusive worldwide. Again, the copyright is typically software, and then you have to demonstrate that you are commercializing this technology. And the patent cannot be expired, or the license cannot be expired. It has to be active. Things like trade secrets, trademarks, service agreements, licensed software that's third party, are not protected proprietary intellectual property. You must have financial statements. You must not have positive operating income in the past 2 years. Your financial statements must be US GAAP standards and prepared by an independent certified public accountant. Review, compilation, and audit is potential, provided you meet all of the required financial statements and the footnotes. If you're publicly traded, your Form 10-K is acceptable. If you are a subsidiary, your parent company financial statements also must be provided. Consolidating statements are always acceptable. Consolidated statements may be acceptable. That really depends on if it's all broken out for both the individual applicant as well as the parent company. Again, you cannot have more than 224 US employees, and that includes all affiliated companies, parents and subsidiaries within that employee count. There is a minimum number of employees in New Jersey based on the year of founding. And the year of founding doesn't always correlate with when you actually started business. So that's important to note. If you're less than 3 years since your founding, you require 1 full-time employee in New Jersey. Between 3 and 5 years, you need 5 full-time employees. And if you're more than 5 years, you need 10 full-time employees. So employment eligibility. Again, this is from the date of formation. And it's considered to be at the time of your application, which for all practical purposes is June 30th. That's when the application deadline is. Employees must work 35 hours a week full-time. They have W-2 wage tax in New Jersey. They're working physically in New Jersey 80% of the time, and they have been offered the health insurance. It's possible for a waiver of health insurance. The individual employees, if they're covered under another policy, for example, from a spouse, but that evidence has to be provided to us. Full-time employees are not contractors, so 1099 is not included. Consultants, interns, seasonal employees, temporary employees are not full-time employees. So that headcount of 1, 3, and 5, and 10 is very important to understand. The application fee is $1,000. It's an online application. The fee is paid by credit card. When we talk about, and again, no new information after June 30th, only clarifying information. And the example I'm comfortable to give to you is if, for example, you have your office based in Princeton and you're telling us that your employees are living in Manhattan, we trust but verify. And we can verify with clarifying information, for example, EasyPass or key card passes to evidence that they're physically working in New Jersey 35 hours a week, 80% of the time. You are encouraged to submit your applications as early as possible because that will give you the opportunity to add any information that's required as identified by the review team, but after the 30th, no new information. So just for certain clarification, we are allowing you to sell the net operating loss based on the corporate offset, the tax rate. So in this example, we are looking at 0.09, and then there's selling at a discount. The statutory floor of that sale price is 80 cents on the dollar, and the historical market price is around 90 cents on the dollar. So you can see in this example, the $5 million becomes $405,000 cash back into the company. It is possible to claim prior years if you have NOLs for multiple years. This 2018 applied factor goes into effect for years before 2018, but that's a calculation that can be determined through your application as well as verified by the Division of Taxation. The annual allocation, again, is $75 million. This first pool is tied to companies with the base of operations in the opportunity zones or certified minority or women owned. And then the general pool is for all other applicants. Again, the maximum lifetime value is $20 million for a company. There is a recapture. So if the company, after selling its benefits, leaves the state of New Jersey, there's a 5-year calculation, 100% in the first year, and then stepping down 20% year over year. The exception is if the company goes out of business, it's in liquidation. There is a lot of information on the website. There's extremely detailed FAQs. So if you have a chance to look through them, you'll have probably every question you can think of answered, unless it's very specific to your company, in which case I can be available to walk you through eligibility again. Thank you very much for your time. I will turn this back over to Caitlin, who can then inform me of your questions, and we'll try to address them.
Wonderful. Thank you, Christopher. I am just going to take a peek real quick. I do not see any specific questions that have come through now. I do want to put out another call for those questions. If there's anything about your specific sector or location, like you can ask. Just feel free to ask questions, and if there's not anything that we can get into granular detail about now, we will refer you to our website. We'll follow up. Everybody will be able to. We will be recording everybody's email if you registered, and we'll be able to get in touch with you after the fact as well. So don't hesitate to ask any questions that you may have. I do see that some that are coming through now, which is great. Thank you so much. This first one says the NOLs are for New Jersey only. Is that correct? Not federal NOLs.
Correct. This is for New Jersey tax credit.
Christopher, can you possibly go back to slide 3 real quick? Maybe review those again. So I'm not sure they were looking at this person was anonymous when they submitted their question. And they're looking for pages 3 to 5. So that timeline piece I think is huge. The program fees is pretty straightforward. But maybe go back to the timeline real quick just to make sure that they can get their eyeballs on that. This will be posted on the recording will be posted on the YouTube page for NJEDA, which is, I believe, the handle on there is New Jersey EDA at YouTube, and we can drop that in the chat as well. All right. And the next question. The next question is on the employee log. Do we still need to include employees located in other states or only the New Jersey employees?
All employees.
Okay.
And then we have to validate that the people who are indicated as working in New Jersey are working in New Jersey 35 hours a week, 80% of the time.
Okay. But there won't be any, other than the listings, we wouldn't have the ability to do any other listing on the other employees out of the state, correct? It's really those. So we want the full list, but the additional due diligence will be done on the New Jersey employees, correct?
Right. And the full list includes parents and subsidiaries because the maximum number is 224 employees in the US.
So that's that one. Beautiful, wonderful. Thank you so much. Additional question is it cumulative? And I may not be understanding this question correctly, but it just says also, is it cumulative NOLs through December 31st, 2023? Does that make sense to you?
Yeah. One more note, aspect around that. You have to have filed your taxes by June 30th as well to claim the credit for that year. Having said that, I interpret use the word cumulative as prior years. And yes, you can claim prior years. You just need to itemize them year by year within the application.
Wonderful. On requirement states, the employment offer letter, resume, and job description for every employee hired in the current year. Can you explain? So,
I'm not certain I'm understanding the question correctly, but we will look to see where the person is based, what their job is. If it's a brand new hire, if you're hiring them right now to apply for the program, then there's going to be a due diligence process where we want to make certain that this person is not, a family member, as an example, or that the person's CV matches the position description.
mm-hmm.
That's what we look at.
Mm-hmm. Yeah. So, all things that you should be collecting when you hire employees. So should be having them on file already. All right, we do have a few more, which is wonderful. Pertaining to the date of formation versus the current business. COVID shifted a lot for us, and although we formed in 2017, our current business is as of 2022. Could you please help me understand if in my case that is relevant?
Yeah, your data formation was explained to be 2017, which means you were formed more than 5 years ago. You would need 10 full-time employees.
Can the NJEDA determine if a business is a tech or science, tech and science prior to submitting the full application? So is there a checklist thinking about folks who may be worried about that application price? If they're not going to be eligible, how can they determine that ahead of time? Right.
So the definitions are listed here. And again, this will be posted and they're also available. We really can't make a determination on your eligibility until the full application is submitted. But if you're clearly not eligible, we'll let you know. It's for the applicant to evidence that they meet the definitions.
Mm-hmm. So it's their judgment. Okay. Where can you get information on selling the credits post-approval?
There is a list of buyers on the website. It's not the full list because a number of buyers are going through financial consultants. You can find them through a search engine and, tax credit consultant, and you will be able to find some. And if you're really, really stuck, we will share the list of known consultants who have been active in the past year. That list is 3.
Okay. The $20 million cap is a benefit award cap. Does the benefit mean the cash a company can get through selling, NOL?
No, that's the benefit cap, not the sales price of the NOL. And if for some reason a company elects not to sell after they've been awarded, that award is still leading to that cap.
What kind of support are you looking for? And is this for employees hired in 2024?
Can you rephrase that question?
So what kind of support are you looking for? And is this for employees? So maybe take that second portion first. Is this for employees hired in 2024? And are there specific job descriptions maybe for those folks? Is there any restrictions around what they can be doing? I'm not sure if that's what they're going
Yeah,
for.
okay, so that's a very difficult question to answer. That's a specific situation,
Okay.
which I would encourage the person to reach out because it's too open-ended to answer.
Can a Delaware corporation with its headquarters in New Jersey be eligible?
Yes, but again, this is against your tax credits in New Jersey, and that's something that you have to know. If you're filing taxes in New Jersey, you may be eligible.
Okay, wonderful. Are there any restrictions when selling the credits?
The restriction is 80 cents on the dollar. That's the lowest allowed exchange price by statute. And then it's selling by April 15th.
And so there's no restrictions on who you can sell to?
It's an unaffiliated, profitable company that's paying taxes in New Jersey.
Perfect. For the employee log, for tech companies, it's common to mostly work from the computer together. Is there a nuance from physical location of work to digital location? So I guess if you have remote employees that may not be New Jersey based.
Yeah, the employee rules around employee is working physically in New Jersey in base of operations. Okay. So if you have everybody dispersed working remotely, and that's a challenge to meet the program definitions.
Yeah. Yeah. Okay. How should we account for? Okay, so how should we account for remote New Jersey employees? Obviously, speaking to what the previous question just was.
Yeah, again, I think that's a rather specific situation, and if you want to reach out to the program, you'll wind up talking to me again, or this time it will be a mutual discussion. Okay. The definition is in statute. We cannot reinterpret it. We have no flexibility about it. It's 35 hours a week, physically working in New Jersey, 80% of the time.
Okay. And I will share that email again. It is in the chat. It is nol@njeda.gov. Just to reiterate that. Give me just a moment for those specific questions. Wonderful. All right. For PPIP, our software needs to be formally copyrighted. Does our software need to be formally copyrighted? If so, can it be pending when we file?
Yeah, patent pending is appropriate, but the copyright registration is done at the Library of Congress. And it's a very uncommon situation because a lot of software developers are using plug and play within their programs, and you cannot copyright something that you've taken from another product.
If we filed an extension for 2023 to September 30th, would we need to expedite the filing for the NOL from 23 to be included in this auction? So, yeah.
So to claim the tax credits for 2023, you have to have filed by June 30th.
Yeah. So that sounds like a yes. Is it advisable to use a consultant to submit? If so, what is the typical cost? Again, for the application. Yeah.
Yeah, to be honest, The application is a bit cumbersome, but it's certainly doable, even for somebody brand new. And if you have questions about eligibility or the application process, we can schedule a call and I can walk you through it. There is a sample application on the website, and I encourage you to look through that. If that seems too onerous, you may want to reach out to consultants.
Mm-hmm. Yes, and we do have also our customer care general support line for applications here at EDA. And Christopher was talking about that additional clarifying information period where additional clarifying information can be accepted as well. So there is, if that's needed, that is a little bit of grace that I think is provided to folks as well. For the employee count, is that the current employees or aggregated employees? I ask because we have a total of 12 employees, but only 2 are current. It's been just a shift in business and economy, and we are excited to pursue hiring again.
So you must meet all eligibility requirements, including the employee headcount at both the time of application and at the time of closing, which is the time of the sale. EDA will validate that you meet all eligibility requirements at both the time of application and the time of closing. Mm-hmm. So if you have a change in the employee headcount and you're no longer eligible, certificates will not be valid.
Just to speak to some of these folks that whether it's their filing is not going to be done in time, or in this case, is this a program that is typically repeated? Do we have any sense that for next year, maybe these folks will be applicable or eligible?
This is an annual program. It's actually, I believe it to be the oldest program in the EDA since 1999. So if for some reason you don't meet eligibility requirements, for example, you don't meet the employee headcount this year, and you do next year, apply next year, and all prior years of NOLs can be claimed in that application.
But that 5-year formation, that's the thing that might come into play, and the other piece to think about, correct? Because you may become uneligible after that 5-year point, correct? Am I understanding that correct? That's my question. Okay. I apologize.
No, that's fine. If you're more than 5 years from your formation, you need 10 full-time employees.
Okay, that's the restriction that pops in. Beautiful, thank you, I appreciate that. All right, so the next question is, credits must be sold by April 15th. However, any requirements on when the credits must be applied by the purchaser, and what tax can these credits be applied to?
So I am not really able to give any sort of tax advice. The credits are dependent on the use. Okay, that's a very awkward thing to say. If that potential buyer would like to speak, I can arrange to speak to them offline.
Beautiful. If a company is formed in 2020, is the employee requirement 10 NJ full-time employees at the time of application?
Yes, and the time of application is considered to be June 30th. So if you were formed 5 years ago, you would need 10. If you were formed in 2020, and this is year 2024, that's less than 5.
Employees who work remotely from home and their home is in New Jersey count as New Jersey employees, correct?
They have to be physically working in New Jersey at the base of operations. So the program is not really designed for remote workers.
Just to clarify, okay, this is another one asking about remote employees are not. What if the company allows each employee to work at a space sharing company like we work? And that is in New Jersey.
That question is somewhat open-ended in the sense that I'm not certain if everybody's working in one place or if they're all working in different places, but they should be working at the base of operations. So if your base of operations is in a shared use facility and you can evidence that, that would be considered your base of operations.
Okay. So I think for folks, this sounds like a very, very specific question that's really dependent on several factors for and involving remote employees. So those folks in those situations should definitely follow up with Christopher at the NOL email. All right. So I do not see any more questions. That was a great bunch of questions that we got through. But any last call for anybody? I don't see anything coming through. I do want to remind you, Christopher, just in regards to the office hours that are coming up. If you want to say a word about that.
Absolutely. Thank you for that. On May 17th, we will have a virtual office hours where you can get introduced to all of the innovation products. And again, there will be an in-depth session on NOL as part of that, because this is NOL season from May 1 to June 30th. And we would really encourage you to take advantage of the program because, again, it's cash, non-dilutive, to help you sustain and scale your operations. You can register online at our website.
We did drop that in the chat as well. All right. No additional questions did come through, so I don't know if Christopher, if you've got any closing remarks or anything else, but we're good on our end.
Excellent. So thank you all for listening and spending this half hour with us. Take a look at the website for the FAQs, because I'm certain some of those specific questions are addressed in the FAQs. I look forward to your participation in the program and applaud your entrepreneurial endeavors.
Thank you.